Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Chawi. Today is the 1st of November 2023. Assalamu alaikum. Hello everyone. This is Liquidity. We're going to be tape reading the FOMC interest rates announcements, which is coming out at 2 p.m. New York time. So it's about 7 minutes from now onto the announcements. We're now currently viewing the weekly chart of the DXY. And for your info, the FOMC is usually a two-wave pattern that usually the 2 p.m. move is gonna be the false move or the Judas swing, and then the real move is gonna be occurring or unfolding after 2:30. And for the 2:30 is like when is the Fed chair Powell jawboning about the economy and about the interest rates. So let's drop down now regarding it's gonna be a weekly market review dropping on Sunday, next Sunday, where I'm gonna be discussing how we've been trading. The daily chart, as you can see, on Monday and Tuesday, we walked inside the fair value gap and we tagged higher, reaching to the buy side liquidity, which is the internal range liquidity. My next target is going to be the external range liquidity right there, as there is not any internal range liquidity inside this range, un unless this one right there that's forming right now. We're still going to be seeing how price is going to be closing here to see if the next day is going to be closing above, which will be potentially forming a fair value gap here that price can retrace to it and make it efficient before reaching to the external liquidity, or it can just reach to it before it makes a fair value gap. Going to the 15 minutes time frame, so here are the levels here. I'm looking at this buy side liquidity and this sell side liquidity. You can see today how we traded lower since we opened, took the sell side liquidity, which is previous day low, and then we rolled up higher, taking previous day high, and we just kept consolidating inside overnight. Regarding today, we just rallied up higher, and now just recently, after the opening at 9:30, we traded lower, took the sell side liquidity right there, and we got inside this range between this high and this low. Let's go to ES quickly. You can see how price just kept pressing higher since Monday. As you can see here, we have a buy side liquidity right there, and we have a fair value gap. We'll be monitoring how we we have equal highs here, relative equal highs. Dow, because why not? As you can see, Dow is a bit weaker here to the downside when compared to ES, let's say. You can see how ES has been holding here above equilibrium base level from this low to this high. So if you measure it from this low to this high, you can see that ES is holding above the equilibrium, whereas Dow has wicked through the equilibrium, as you can see, as you can see right there. So this is just as a case study regarding this live stream and the future live streams that I'm going to be producing about NFP, FOMC, and perhaps CPI. All of them are not meant to be taken as any financial advice. It's just being utilized to study liquidity, how price move from buy side liquidity to sell side liquidity, and from sell side liquidity to buy side liquidity, how it moves and fills the inefficiencies and gravitate towards liquidity pools. So less than 30 minutes until the interest rates announcements. Let's go to the XY, to the 5 minutes time frame. This is the weekly constant measurement. All right. Our price is attacking this side, has formed equal lows. All right, so you can see at 2 p.m. on the announcements, it has traded lower, it have left those equal highs or relative equal highs in place, and this buy side liquidity. So we'll see how we trade from here until 2:30, and at 2:30 we'll see how the real move is going to be occurring. So right now and up until 2:30, it's where price is going to be trying to accumulate as much positions as possible and trying to trap as much retail as possible in the wrong direction for the real direction or the real move to be unfolding in price and making sure that no retail or no one is being profitable on that run. Let's take a look on ES. It has swept the buy side liquidity and retraced, filled some of the fair value gap. This is a 15 minutes time frame fair value gap, as you can see right there. So it has swept the buy side liquidity, filled some of that inefficiency. There is still a small inefficiency that's not still yet in place, as you can see. Let's take a look on NQ. As you can see, NQ has already also attacked the buy side liquidity. It has left the sell side liquidity in place. Well, actually, since we're still watching it, I want to be talking about yesterday's trade. I took a trade yesterday. It was in New York AM session, I believe. Yeah, I was shorting only 5 minutes. I just looked it up right there. So, as you can see, price has taken a buy side liquidity here yesterday, and it has also swept the previous day's high. So on Tuesday, when we were trading inside here, price took this buy side liquidity, which is previous day high, and I was looking. This is London's low. I was aiming for London's low, and I was aiming for previous day low. So this is previous day low. This is London open kill zone. Or you could say London low. And you can see how we swept here the buy side liquidity. So we swept the buy side liquidity here. We reached to the wick convergement, which is from the weekly chart. So if you go to the weekly, you can see this is the weekly chart. So no, I think it's on the daily. I'm not sure what that level is, but it was primarily based on we took the previous day high and we took the buy side liquidity here. So we formed the buy side liquidity here, trade lower. As you can see, we formed a low right there, and then we took it. So many retail are gonna be involved into this move here as a breakout artist going short. They will have their stop loss above this high, trusting it as resistance, which we have like two equal highs, as you can see, clean highs. They will trust it as resistance and they will sell short here as a breakout. Price later on has took this buy side liquidity and then broke lower. So it made sure that no parties of retail are involved in this move here. Price has, after it broke lower, it retraced, worked inside this fair value gap, and it reached to the bearish breaker, as you can see. So the bearish breaker is the lowest down close. As you can see, this is the lowest, or both of these are qualified as the lowest down close. So you could be choosing qualifying this as a bearish order block or bearish breaker, excuse me, or you could be qualifying all of these three consecutive down close candles as a bearish breaker. Price then later touched it here. I entered here right there. I might show you the positions later. I'm gonna be attaching a tweet in the description of this live stream, so you're welcome to go and check it out. So I've entered there and I was looking for 2R, so I have fixed my position at 2R. I had my stop loss at the rejection block. So I had half of the position at the 2R and I was looking to hold the rest of the position reaching to London low, which is the sell side liquidity of London. For your info, you can learn more about the liquidity pools in the teaching that was produced by my mentor ICT. It is one trading setup for life. I believe this is the title of the teaching, but he's gonna be introducing many ideas about liquidity pools, so it's very informative to go and check out that lecture or that teaching. So I was looking to, or I was aiming for this sell side liquidity, which is London's low, and for the previous day's low. Since we've swept the previous day's high, it is logical to see price sweep the previous day low. Anyway, after price has reached to the 2R marker, I had the rest of the TPs at half of the other half of the positions. Some were at London's low and the others were at, or my terminus was as previous day low. So, and I had my stop loss at the 2R mark. So if price decides to revisit my, or go in drawdown, I'll be booked on 2R for the day. And we can see in fact price just from there, it just refused to go any lower. It's just or like offset based on this fair value gap right there, as you can see, and then it just traded higher. A bit of consolidation here during New York launch, and it has swept this inside liquidity that was formed here, and then it ran up higher, and that was it for the day. So this is the trade that I took yesterday. Going back to our charts here, as you can see, price is just being, this has just touched the buy side liquidity once, and now it's being held in between this range, between the high and the low of the 2 p.m. candle. The same thing is mentioned here. So here's where I'm going to be implementing some narrative into action. Obviously, it's not to be taken into any as a financial advice, but and also it's just for the studies. We have a fair value gap here. I'll be watching closely. If we close above it, if we close above this fair value gap here, above this level, which is 106.971, I'll be expecting price to run for these relative equal highs, which are internal range liquidity, and then reach for this buy side liquidity. If we did close above this fair value gap, so if we closed above it, in terms of the candles, if the candle closed above it, I'll be expecting price to reach to this buy side liquidity and to this buy side liquidity. And what determines if we're going to be reaching to this buy side liquidity is the speed and magnitude after we sweep this buy side liquidity. So if we sweep it and we just accelerate to the upside, we'll be reaching to this buy side liquidity. The other scenario would be, so here's when if then, if we close, so as you can see, it's closed above the fair value gap. Now I'm really expecting it to just run towards this buy side liquidity and this buy side liquidity. I could be wrong on my anticipations, but it's fine. It's just for the studies. And the other scenario that I was expecting or looking at is if price didn't close above this fair value gap, I'll be looking if price wants to close below the consequent encroachment of this discount wick. So we have discount wick here of the 2 p.m. candle. It formed a long discount wick. If price would have closed below the consequent encroachment of this discount wick, I'll be expecting price to run out this low, reach to this fair value gap, which is between this candle's high and this candle's low. And if we close above this fair value gap right there, bingo, it has 20% liquidity here. It's not hindsight. I've just mentioned it. It's live. I cannot be editing this video. It's just live. I'm live streaming it. So the other scenario would be just for the studying purposes and for the education. If you closed below the consequent encroachment below of the discount wick here, I'll be expecting price to run lower, take this sell side liquidity or this low, close below this fair value gap low being treated as resistance, and it can overshoot towards the consequent encroachment of this fair value gap and just run lower towards the sell side liquidity, fair value gap, and this sell side liquidity, which is going to be my drawn liquidity. Now, why did I choose this level or the consequent encroachment of this fair value gap to be for the scenario number 2 to be resistance? Because if we really did close below this fair value gap, what is this level also? What do you have right here? What are those two consecutive down close candles? These are bullish order block. So the bullish order block can be used for both for entry purposes and for targeting purposes. So to measure the the mean threshold of this bullish order block, what is the mean threshold of this bullish order block? What is the level here? 106.773. What is the high of this candle or the low of the fair value gap? You look right there at this level right there. It is 106.773. That is exactly the same. This is why, and we've also swept this buy side liquidity. Yeah, that's buy side liquidity. I'm also aiming for this one. So that is exactly the specific level of the fair value gap low. So whatever I'm mentioning in the live streams or in my weekly reviews or the weekly market reviews is not being based on my emotions about the marketplace or what I believe about what's going to be happening about the geopolitical things that are happening around the world or what I think who's gonna be buying this share or who's gonna be selling it, because buying and selling pressure doesn't exist in the marketplace. So I do not include or involve any of these kinds of emotions or this screw or like skewed thinking or thoughts about market. I'm being just involving pure market analysis. And you can see the mean threshold of this bullish order block is exactly the low of the fair value gap. So if we close below the low of the fair value gap or the mean threshold, this bearish or bullish order block can be violated to the downside, and it can be utilized, the mean threshold of it, or the high, even the high. But since we have a long wick, we'll just be looking at the consequent encroachment of this. And what is the consequent encroachment? Let's dance a little bit. So we're done with the consequent encroachment of the mean threshold of the bullish order block. What is the consequent encroachment of the fair value gap? There is the 106.786. 106.786. What is the opening of this candle? You look right there. This is the O that is abbreviated for opening. For this candle right there, it is the 106.786. That is exactly the same as you can see. So price can, if it would have closed below the consequent encroachment of this discount wick and reaches and closes below the fair value gap, which is the mean threshold of this bullish order block, I'll be expecting the low and the consequent encroachment of the fair value gap to be treated as resistance. Why? Because the low is the mean threshold of this bullish order block, and the consequent encroachment of this fair value gap is the opening price of this bullish order block. So the opening price of this bullish order block is also sensitive. So when price closes and uses it as an inversion level, it can be sensitive and price can show an immediate reaction from it. So we have now the fair value gap here. Back to our topic. As you can see, we have fair value gap. Price didn't, like, it shows it repelled away immediately after taking the buy side liquidity. Price just trading back to the fair value gap. Now this is called inversion fair value gap. Why? Because price has formed, basically it's like a balanced price range. So we have an inversion fair value gap. Price has created a fair value gap. The next candle has traded higher, closed above the fair value gap. So that fair value gap is now being delivered to the upside. So now if price trades to the fair value gap that is now abbreviated as an inversion fair value gap because we closed above it, this can show us support, or it cannot. I could be wrong. But since it didn't show us the reaction here, it's gonna be questionable here. I'm looking at the consequent encroachment of this premium wick to see, I want to see price just disrespect this level, basically, and just close above it. So as you can see, here's where I'm including my technical analysis in price without involving any of kind of emotions. And as you can see, since the beginning of the live stream, I haven't tuned in or I haven't checked out what is the actual interest rates that have been announced about 23 minutes earlier. Why? Because it's all nonsense. They're just using those reports as a smokescreen to be harming as many retail as possible. So that is the only purpose of these reports. And the actual cost in the US can be determined if you would see the gas prices and the grocery stores. It is not actually the kind of the interest rates that we're seeing. The the prices are far higher than the actual interest rates, what do they suggest. So it's obviously a lie, and it is just used as a smokescreen just to accumulate or engineer more liquidity into the marketplace and to harm more retail. So price tapped into the inversion fair value gap here about, let's say, about 5.5 minutes before the Fed Chair Powell, Jerome Powell, is going to be talking and Joe Boning about the economy and about the interest rates announcement decision and how it's going to be affecting the economy on the long term. We do not care about what he says. We just look at the chart, and the chart is going to be telling us everything. So since 2 p.m., as you can see, and up until to now, you can see that price just traded lower a bit, taking this inside liquidity, didn't reach for this fair value gap, and it traded up higher, took the buy side liquidity. So it can run up high, it can run up higher, take the buy side liquidity to trap more retail, and after 2:30, it will just trade lower and just complete the objectives of filling this fair value gap, reaching to this sell liquidity. Let's take a look on ES. As you can see, these clean lows right there. It's just suspect. We have the consequent encroachment of this premium mic. I'm gonna be watching that closely to see if price closes above it. I'll be expecting price to run this high and fill this fair value gap right there. The reminder of this fair value gap, and perhaps reach for this price and liquidity. Or else we might attack these lows. Now, price, or let's say the retails, are now trusting these level right there as support. So we would want to take them out of the marketplace by creating a low and then run up higher for these objectives. So many of the retail are going to be now in this position. They're going to be long now, aiming for these highs, this high and this high, and not specifically this high as I'm targeting or as my draw liquidity, but they're going to be just betting on higher prices basically. So leaving these as they are here is very suspect for me, and I just want to see price take them out and then reach up higher towards this price side liquidity. Price touches the wick consequence of this premium wick. Let's just visit. Thank you a bit. The same thing I've mentioned. We have sell side liquidity here. Have lows. People are respecting it and trusting it as resistance. And the whole time it wasn't recording. That is nice. Or it wasn't showing my, let's say, my charts. My bad now. I'm gonna be doing a quick recap of what I was talking about. I was just looking at these buy side liquidities, this sell side liquidity. You know, it's kind of frustrating, but it is what it is. 2:30 now. Gonna be seeing how price is running. All right, so basically, what I was talking about the whole time, we have a buy side liquidity here and sell side liquidity here. We had a fair value gap, and at 2 p.m. of the interest rates announcement, we have traded lower, created this long discount wick, and the wick consequence is influential for me. So, as I've mentioned, if we closed right there, if you would rewind the live stream, you would see that I was waiting for price to close above this fair value gap, and it did close. And I've mentioned that if we close above it, I'll be looking for price to reach to this buy side liquidity, and we've seen it reach to that buy side liquidity perfectly. Then I was talking about if the other scenario would be if we close below the wick consequent encroachment, what I would be expecting. So if we close below the wick consequent encroachment and I'll be expecting price to run this low right there. Run the low, and if it was really animated and closed below this fair value gap right there, I'll be expecting it to run lower to take this low, fill this inefficiency or this fair value gap and reach the 6 liquidity eventually. But it's and why I was choosing this low and the consequent encroachment is if you would measure the mean threshold of this bullish order block, what is the mean threshold of this bullish order block? It is 106.773. What is the low of this fair value gap or the high of this candle? Look right there, the high. It is the 106.773. That is exactly the same to the tick, to the absolute pips. So there's no any deviation, there's no any difference. And I've mentioned that if we close below it, we can see the low or the consequent encroachment of the fair value gap being treated as resistance that can send price even further lower to the downside. So why did I choose the consequent encroachment exactly? What is the consequent encroachment? Let's measure it. It is the 106.786. All right. Now, what is the open of this candle? Look right there. The O which is abbreviated for the opening. What is the opening of this candle? It is the 106.786. That is to the tick the opening price of the wick consequent encroachment of this fair value gap. So why the opening? Because the opening can be used as an inversion. Order blocks can be used as targets as well as they can be used as entries. And in this scenario, this would be used as target first and then could be used as a confirmation, let's say, that price gonna be going even further lower. So it would be using the opening price as an inversion PD array that can send price even lower to the sell liquidity. Let's check ES quickly. It's a bit frustrating, but promise you the future live streams are not going to be encountering any of these kind of issues. Our next scheduled live stream is going to be on Friday. We're going to be talking about NFP. So we have NFP on Friday. We're going to be discussing NFP on Friday. We'll see how we're going to be trading there. So as you can see here on ES, I was also looking at it. We have formed equal lows, and I've mentioned that price left this suspectly without taking them. Retail are going to be trusting this as support, and I've mentioned that they're now in long positions, and I would love to see price trade one more time below these lows, make them jagged, and to engineer more liquidity into the marketplace. Just trigger the breakout artist that's trying to go short. They will set their stop loss or buy stop, or basically their stop loss is going to be above the highs. So we're going to be taking the lows, inducing them into the marketplace as short players or short traders, and then price will be trading up higher, taking the buy side liquidity, which they're the people who are in shorts, they're going to be having their stop loss above the highs. So market would be trading up higher, taking that buy side liquidity, which is their stop loss, the people who shorted, and we'll be reaching for this buy side liquidity. So their stop loss is going to be used as a fuel for us to go even further lower, and the move is going to be even supercharged to the upside. That is basically what I was trying to say. Going to NQ, the same thing I've mentioned here, we have sell side liquidity. It has taken the buy side liquidity here. Let's go back to DXY. As you can see, the bodies here are respecting the weak constant requirement. We formed equal lows. Other than most of the other FOMC rate announcements, we've seen that this one was a bit suppressed, or it was a bit more of silenced one. We didn't see much range expansion in price. Which, like this is 2 o'clock and we have 2:30. So price basically is inside the range between this candle's low to this candle's high. The way it left these equal lows here is a bit suspect. The support was shown here with the weak consequent encroachment. The candles were respecting the weak consequent encroachment, and the wicks were just trying to do the damage here. We've reached in the buy side liquidity here. Price did kept this buy side liquidity in place, and it has reached lower to take the sell side liquidity. So much in closely how trading DXY has taken the buy side. It has left these equal highs, equal lows with a favorite gap in place. Since it wasn't recording, so I'm gonna be going again because I actually love what I'm doing. So it's not me trying to get done with things as soon as possible and just leaving. No, I love reading price action. It is in my blood. So I want to review yesterday's trade, I believe. Yeah, it was yesterday's trade. I've shorted ES during the yes, right there. So for context of what I was saying earlier, you have previous day high, We have London low, and we have previous day's low. So we have these levels right there. Yesterday at New York Open here, or it was actually before New York Open. We took the buy side liquidity or previous day high, and we took the short term this buy side liquidity right there. As you can see, after we took the buy side liquidity, we've formed a low. So we formed these equal highs. As you can see, these two highs. We traded lower, formed a low, and on this candle we took this low. So after we took this low, many people are gonna be selling their breakout or like sell stops. They're gonna be selling on breakout, or they're selling on weakness here at this candle, going short, having their stop loss above these two equal highs because they trust it as resistance. And then price has just retraced and rallied up higher, taking the buy side liquidity. So many people who were short here, having their stop loss, or yeah, stop loss above these highs, equal highs, trusting them are as support, as resistance, they will be out of the marketplace right there. And who are gonna be induced in the marketplace? Breakout artists who are trying to go long. So people who are trying to go long and having their stop loss above this area and they respect it as support, they will be throwing something like that. So they will be saying this is support, price has been supported by this level, so we will be buying on strength and hoping price is gonna be reaching higher, and it tanked lower. So both of parties, this is when the party of breakout artists were going short, they were trapped in short positions and their stop loss was triggered right there. So their positions were used to drive price lower from there to attack the opposing party, which is the breakout artists who are trying to go long right there. At this candle right there, these two candles, we have swept these lows, so we have successfully made both of the parties, breakout parties, the breakout artists who are trying to go long on strength right there, and the breakout artists who are trying to go short on weakness right there. Both of them were out of the marketplace, and no one except smart money or the market makers in this run lower as they do the swing. And I was part of this. You're more than welcome. I'm gonna be, if I remember, I'm gonna be attaching the Twitter tweet of me taking the position. I've shorted right there. We have high, low, higher high, lower low. So we have a bearish breaker. You could be considering this alone as a bearish breaker, or you could be considering these three consecutive down close candles. We look at the lowest closing price here, and the lowest closing price is, both of these candles have the lowest closing price. You could be qualifying this because this has a long wick, and at the same price, at the same time, these are three consecutive down close candles, or you could be qualifying these. So either or, I was honestly looking at this one right there. So price has retraced. As you can see, it touched the low of the bearish breaker, excuse me, and then it dipped just lower. I was part of this right there. I had my position, my stop loss at the rejection block right there. Why? Because we have, this is one BD array, or this breaker high, fair value gap two, the rejection block is the third. So when three BD arrays fail, you're you know it's just better for you to be out of the marketplace if three BD arrays have failed. And this is exactly how I've set my stop loss. Everything in my trading is just based on specific things in price. It is not based on emotions, as I've stated earlier. Everything is calculated to the pip. Every move I do, every move I make, it is just calculated. So I have my stop loss at the rejection block right there, and I was aiming at 2 risk to reward ratio, or 2%. We got that right there, and then once price reached there, I was aiming or looking for price to reach to the London low and to for the previous day's low, which is right there. So I had more positions and my terminus at the previous, so I had more partials as a profit on at London's low, and my terminus was at the previous day's low. After price has reached the 2R, my stop loss immediately has been moved to the 2R level mark. So if price even this ever decides to revisit or retrace against me, I'm gonna be booked on 2R, which is my plan in the first place, and I got that. So price, I was holding it here. I was expecting price to just continue going lower, to attack the London's low, but we didn't get that, and price just traded up higher, went higher for the day. A bit of a consolidation during New York lunch, took this aside with the characteristics of New York lunch, and then it just kept continue running up higher. We have a low, high, lower low, higher high. This is a bullish breaker inside an inversion pivoting gap. Price the trade to it. Was trading to the bullish breaker all the time here. Bearish, bullish on the block. This stone close candle. Price traded to it, and you can see how it reached to the closement of this pre-discount wick. Traded up higher, just continued going higher, and it's just considered for the rest of the day here. So that was my position. I'll make sure that I attach the charts for me and the proof of me executing it off on my MT5. So yeah, that is pretty much the setup that I took yesterday. So price has swept the SSL liquidity here. I'll be monitoring closely if price wants to reach to these relative equal highs here on ES. Going back to DXY, the U or the US dollar. It has swept the buy side liquidity. So I'll be looking or monitoring closely if we want to just trade lower to the relative equal lows here, the clean lows, the fair value gap, and the phenomena of me why I'm expecting if price closes below it, how I'm gonna be expecting price to be doing, basically. And this is a liquidity right there. I've stated earlier that this live stream and the future live streams that are gonna be are gonna be produced in the future, all of these are gonna be utilized or used for the studying of liquidity. So that's the whole purpose of me doing those live streams, just for the studying and documenting the study of liquidity and how it moves from buy side liquidity to sell side liquidity, and from sell side liquidity to buy side liquidity. So that is the whole purpose of me live streaming. We're gonna be including in our live streams, we're gonna be including FOMC, the interest rate announcements just we did here today. It was a bit, there was a bit of a technical issues and problems, but we're gonna be sorting these out in the future, and we're gonna be live streaming NFP and perhaps CPI. So all of these are gonna be scheduled on my calendar for the upcoming events, and the close one, or the one that's gonna be happening in the future, or the closest one, is gonna be NFP. So we have NFP on Friday this week. So on the 3rd of November, expect a live stream about NFP, and I'm gonna be studying how price. And actually, maybe today's live stream or today's study wasn't really an impulsive moves in price, but when it comes to Friday on the 3rd of November, we're gonna be seeing some wild movements, and you really don't want to be part of, or you don't want to be trading ahead of it, because your stop loss is not gonna be respected at all, and there is just chaos. So you better just stay on the sidelines and just study it. Monitoring now closely how price is gonna be if it wants to reach towards these relative equals. As I mentioned, since we've swept the buy side liquidity right there, there's nothing upside or up there to be swept or efficient, let's say. So it would be logical from price to trade lower, take out these relative equal lows, sell side liquidity, and to fill this favor gap. And if we see some impulsive or accelerated move towards this, or animation towards this favor gap, be looking closely if we reach to the sell side liquidity right there. All right, what I was looking for is just being unfolding lately. As I mentioned, we have these equal lows, and I wanted to see price just take them out, because retail are gonna be trusting them as support, and they will have their stop loss below these levels. So price did perfectly, was very close from reaching to the buy side liquidity. It traded lower, took the sell side liquidity, and now it's trading higher to attack these relative equal highs. Right there, we got it. So obviously, nothing here that I'm mentioning is being in hindsight. This is a live stream, and I'm sharing everything that is happening in the live stream. So I cannot be editing this video or this live stream, let's say, and just produce it in the future, because this is a live stream, and everything you've seen here, you can go to your charts and you can see the same thing unfolding in price on your charts. And what I've mentioned right there I mentioned how we had I've seen these equal lows right there, relative equal lows, and how they clean they are, and the market and how they are suspect. So if price wants really to trade higher, it will not really permit the people who are long here. I've mentioned here that people or retail are now long at this candle right there. And it did really trade up higher, but not much. It traded then lower to make sure that they are out of the of this move by putting them to bed here on these two candles. It made sure that no one in is in the move, and then it traded up higher, taking out these two highs or relative equal highs. So this is market making at its finest. I'm just mentioning or sharing everything that I want to see in price, and it's just being unfolding smoothly as you can see. So I'll be monitoring here if we close below the quick consequent encroachment. We have this as sell liquidity. We have this Beverly gap here right there. All right, so it closed below the weak consequent encroachment. We've tagged the sell liquidity, and now we're approaching the fair value gap. I want to see how price trades inside this fair value gap. Here is the consequent quotient. So I'll be looking now if we close below it. Hey, what's up, Angel? Hope you're enjoying the stream. Let's check on ES. As you can see, it's just do the best liquidity as I've mentioned. Now, some people may look at it right there as we have took this inside liquidity right there. We have took this by side liquidity right there. So this is low, high, lower low, and then we form the higher high. So this or these candles would be treated as bullish breaker. Be looking at this candle only by itself, and we have a fair value gap here and fair value gap here. So a retracement towards this fair value gap and this bullish breaker could be looked at as the bullish unicorn. Bullish unicorn is basically a bullish or a breaker that is inside a fair value gap. So we have a breaker that is inside a fair value gap. So once price trades and tap into this fair value gap, it can from there reach up higher. Let's check on DXY. As you can see, price did close to the high. Now I want to see it close below the consequent quotient of this wick, which comes at the 106.784. If we close below it, it's just telling me that we might even go further to the downside. I'm gonna be staying here until 3:30 p.m. New York time, and I might just dip out after that. Alright, so we traded door. It's looking like gonna be closing below the consequent encroachment of the discount wick and below the fair value gap low. Let's take a look on euro. As you can see, the same thing or the same phenomenon as here. Some people might look at it as noise, but we don't look at it this way. As you can see, it has swept the lows, swept the highs, so we have a bullish breaker right there. We have a small fair value gap here. So perhaps can retrace to zero the fair value gap right there. This is not an entry. We're just studying price action. Okay, it's still showing us, but if we measure the consequent encroachment of this discount wick, you can see that price has, what is the consequent encroachment is one, it's at 106.784. What is the closing price here of this candle? You could be looking right there to check the closing price. So the closing price comes at 106.782. That is below the consequent encroachment of this discount wick. This discount wick right there. So this is giving me this is telling me, trying to tell me that we're likely to see lower prices. But what is also shouting in my face, this long wick. So this long wick is also an importance to me. I want to see how we trade and the consequent encroachment of this discount wick right there. This is a long discount wick. It's also the same thing, but it's diametrically opposed on the XY. Have high, low, higher high, lower low. So these three candles are also to be considered as bearish breaker. We have a fair value gap here inside of it. So yeah, price has closed below it. Now I'm really expecting price to just continue trading lower and just attack the sell side liquidity. So what I'm expecting now in prime price is just to attack this sell side liquidity in the future. It can have a retracement to accumulate some positions at the bearish. But honestly, if it wants to do it right now, it's better for it just to be reaching to it. Whereas if it's just want to keep it intact, it can retrace to the bearish breaker, accumulate more positions inside this fair value gap and this fair value gap, and then trade to it. But it's not going to be today, it can be overnight. But if it wants to make it or to finish and to reach to this sell side during the New York PM session or before the closing of this session, before the equity market close, it better it better do that without a retracement towards the fair value gap or to the bearish breaker. So it can see some resistance at the low of the fair value gap right there, and or the consequent encroachment of the fair value gap, and we can see it just trade lower. The resistance that I've been talking about and how it's being respected at the consequent encroachment of the fair value gap or the low, it is relative to the bodies. So I want to see the bodies of the candles being respecting the consequent encroachment of the fair value gap and the low of the fair value gap. That is my main concern. The wicks can overshoot towards this fair value gap right there, but the bodies are my main concern, and I want to see them just being held inside this fair value gap. As you can see, it's just resuming as I was expecting. We have the mean threshold of this bearish order block. If we trade to it and we see some reaction in terms of resistance, we can see price just reversing from here and trading lower towards the sell side liquidity. Or else, if it trades and closes above the mean threshold, I'll be expecting price to take out this high, walk inside this fair value gap, and potentially reaching to this bearish order block to therefore reach for lower prices to accumulate more positions at the premium. So if we measure from this high to this low, you can see that, let's just delete this. You can see that we're basically just below the premium. So price can retrace up higher above the premium and basically in the D premium, so above the 75% level, we have the D premium, and this is where you really want to take short positions. And from there, we can see a reaction to the downside. USDs, the bodies are respecting how being inside this inversion fair value gap. If you want to see price reach lower towards this is a liquidity, these relative equal lows, and this is a liquidity. I want to see price closes after we close today. I want to see it closes below the consequent encroachment of whatever the consequent encroachment is of this discount wick. So once we close on this day right there, in about an hour or so, I'll be monitoring closely how we're gonna be, what is the consequent encroachment. And if we want to see lower prices, I want to see price trade and close below that consequent encroachment of this discount wick in the next day. And for your info, we have NFP on Friday in 2 days. There was a bit of retracement to the upside. It didn't reach to the low, and then it repelled away lower, and it reached lower. As you can see, we have a fair value gap here also. It's working inside of it. So now I'm just expecting price to trade towards this sell side liquidity. That's what I'm expecting from price at the moment. So I think that is pretty much it for this case study, because obviously every live stream that I'm going to be producing in the future about FOMC interest rates announcements, NFP, which is non-farm payroll, and CPI. Perhaps sometimes I'm going to be trying to live stream CPI, and sometimes we'll see how it goes. But for sure, it's going to be NFP. Every month, I'm going to be live streaming NFP and FOMC interest rates announcements. And we're going to be utilizing those period of times to be for our own sake by studying liquidity, how prices attacking the buy side liquidity, the sell side liquidity, and how it reaches to discount premium and just try to fill the favor gap or the inefficiencies that are found in price, and just to be efficient, and how the market makers book price. So I hope you found this live stream helpful. I'm aware of the technical issues that were at the beginning of this live stream. I'm working on fixing those. So expect the next live streams to be voided of any issues that could be caused in the live stream. So I think that's pretty much it for this live stream. I hope you found it insightful and helpful. Until I talk to you next time, be safe. Assalamu alaikum warahmatullahi ta'ala wa barakatuh. Peace.